Good afternoon and welcome to our Financial Advisor Forum. I'm Greg Greenberg from The Street. Now, investors are growing increasingly familiar with the activism of Carl Icahn, Bill Ackman, and Dan Loeb, but hedge fund managers agitating for dividends or board seats is not the only kind of activism on Wall Street. There's also closed-end fund activism, and that can be lucrative as well. Just ask my next guest, Rajeev Das from Bulldog Investors. In fact, that's what I'm going to do right now. Welcome, Rajeev.
Thanks for having me.
So why don't you explain exactly what closed-end fund activism is and how it differs from the activism you see by, for example, Carl Icahn?
Well, I think with closed-end funds, we have a value that is apparent. We know what the net asset value of these funds are. And typically when we buy these funds, we try and do it at a wide discount to that net asset value. We like to buy these funds anywhere at 85 cents on the dollar or 90 cents on the dollar. We buy a stake of, say, 5 or 10% of a fund. We make a filing, and then we approach management, and we ask them to do something about the discount, whether it's through share buybacks, tender offers, or even merge with an open-end fund, which would eliminate the discount or even liquidate the fund if performance has been poor.
And generally, what's management's reply to you?
Well, management sees closed-end funds as a stream, as a revenue stream, which is not going to go away. So oftentimes there is resistance, but it also depends on who the managers are. Different managers have different approaches to dealing with shareholders. Some are more friendly than others. Others don't want to do anything at all. So accordingly, we approach different managers in different ways. We try and talk to them and try and get things done, but if that doesn't work, then we have to go down the route of submitting shareholder proposals and running directors.
It gets a little bit ugly. Let's talk about two funds that you like right now. One of them is the Helios Strategic Income Fund. You own 7% of this. Where do you see this going in the future?
Well, this is a fund that, if you go back to March of this year, was trading at about a 3 or 4 discount to net asset value. Over the summer, as investors got spooked with talks about the Fed tapering and interest rates spiked up, discount on this fund blew out to about 13 or 14%, and that's when we started buying. After amassing a stake of about 7%, we filed a 13D and approached management. This is a small fund. We think that if we were to run directors for the board with our 7% stake that we own and other friendly shareholders on the roster, I think it's something that we could easily win. So we really see this as 12 months from now, we see this discount much narrower than where it is now. In addition, you're getting paid 4 cents a month, so that's a yield of about 8%. So potentially you could make 8% on yield and see another 10% on discount narrowing within the next 12 to 16 months.
Well, the market must be listening because you got in at a discount around 13%. The discount now is around 9%. Let's talk about another closed-end fund that you're involved with. That's the Nuveen Dividend Municipal Income Fund. This discount is 14%, and the ticker is NVG. Do you see this as too steep?
Yeah, we think that this discount is too wide. Again, if you look at how these funds are sold, they're sold to retail investors. They typically come out at a premium. And going back again 12 months, people were searching for yield, and they were pushing these funds up to premiums. Once again, Fed taper and these things blew out to double-digit discounts. Again, that's when we start buying. It's paying a dividend of about 5.5 cents a month, so that's about a 5% yield. If you're in the top tax bracket, it's really like 8%. And if we can get this discount to narrow, say, 7 or 8 points over the next 12 months, you're talking about a 12% return on a muni bond portfolio, which is, I think, very, very good.
And then finally, speaking of taxes, a lot of tax loss selling happens in closed-end funds over the next few weeks. This is a good buying opportunity?
I think so. Closed-end funds are notorious for end-of-the-year tax loss selling. People have taken some hits especially on the income funds. And I think you're going to see people selling out of some of these bond funds and maybe buying others. And I think you should be on the lookout for these opportunities and be able to take advantage of them.
All right. Thanks a lot, Rajeev. And thank you for watching the Street's Financial Advisor Forum. I'm Greg Greenberg. Please come back.